So many people are so easily like focused on pointing outward instead of like inward and tracking oneself.
Yeah.
Like people are so unaware of how powerful it is to look inside and to track again. Like, and if you don't know the measurements that you should be tracking, then that's something like again in your fitness, there's macros, there's time in the gym, time in rest, there's calorie intake. There's so many moving parts in terms of what you're supposed to be tracking in order to get the results that you want to achieve. It's the same thing in trading. It's the same thing in your relationship. Like you don't realize how many patterns, how many bad patterns you have in your life until you actually start measuring and managing those things. And it might seem daunting. It might seem overwhelming at the thought at first, but when you start to actually track those things and treat every area of your life like a business, measuring your KPIs, that's when you can really start to get to see real tangible results in your life. And why is that so important? Because ultimately you can't necessarily control everything that's happening to you. You can't necessarily control what's happening in the market, but you sure as heck can control how you respond and how you behave. So what are the secrets? How do some of the most successful entrepreneurs find the freedom that we all got into business for in the first place? How did they find the time, energy, and resources to launch and scale strong? And how do entrepreneurs like us align our time, money, and energy in a way that will allow us to reach what we set out to achieve? These are the key questions, and this community will give you the answers. Welcome to the Prosperity Movement. All right, welcome to the Prosperity U podcast. I am here with the great Zach Shanke, the pretty good Travis Hunter Hennigan, and the amazing myself. I'm just kidding. Everybody here is absolutely extraordinary. We're excited to have you here today. And today we're going to talk about how to protect your trading capital. How to protect your trading capital, how to project really well before this call and really tee this up amazing. Anyways, today we're going to talk about how to protect your trading capital and build a sustainable trading career regardless of changing market conditions. And this is really exciting. Today it's going to be led by none other than Zach Shanke guiding us through this conversation. He has a really great way about keeping us on pace. But really, if you're coming in for the first time, what's important for you to understand about Prosperity Movement is that our mission is very simple. It's to impact the world by bringing life-giving principles of prosperity to it. Our vision is to guide our community to back engineer their full power and potential with purpose-driven growth so they can do more of the things they love with the people they love most. And our values are comprised of the 3 I's: impact, integrity, and intentionality. Impact, in order to impact the world, we value time, health, relationships, and legacy relentlessly at the highest level. With integrity, we value people over profits, and we are driven and dedicated to the success of our community. With intentionality, we provide result-oriented support through mentorship to ignite an inspired, focused community. And man, am I ever grateful for Darren, who goes in and chops things up and makes it super clean so that when people get to listen to this later, it's going to be awesome. Anyways, go ahead there, Zach. I'll let you take it away.
Perfect. So yeah, how do you protect your trading capital? Right? That's basically what we're, have you ever seen traders like one day they're just killing it, or maybe one week they're killing it, and then the very next week they have some losses and they're back at square one? Okay, I actually call this account cycling. Okay, you're up and then you're back at square one, and then you do up again, and then you're back at square one, and it feels like a kind of like you're spinning your wheels, running on a treadmill, going nowhere, right? And so we want to talk about that a little bit, and how do you overcome that? Funny thing is, the same phenomenon happens in business. Okay. And so we always talk about treat your trading like a business. And we got that from our trading mentor, James Leone. And we really took it to heart. Treat your trading like a business. So in business, it happens a lot for especially kind of startup businesses as they get some ups and then they have some bad months and they're back at square one, and then they get a little ahead and then they're back at square one. And it really, really sucks. So how do you prevent that from happening? The term that we're going to talk about today is called risk mitigation. It's mitigating risk. So if we think of it from the standpoint of business, what are some risk mitigation things that we do in business that we'll talk about how it applies to trading later, but what are some things that we do to kind of keep things on track and keep things growing so we can identify problems kind of before they become a big problem?
Mm.
Travis, what do you think?
Well, I mean, the first thing that came to my mind, specifically around business, that translates really beautifully into trading as well, is that we track everything. Like it's not like, hey, I feel like this worked before, and or I think this was pretty good when we did this one time. No, we track and we use the data that comes from it to make decisions based off of the numbers, right? And at the end of the day, we're going to continue to do what's working based off of numbers, not off our feelings, right? And so when we're in, I don't think most people track enough of what they do in business or in trading. Likewise, right? They're looking at a few different variables, thinking that it's going to be a fully representative picture of what's going on, but there could be these. It's always the one button, right, Zach? Right, Brian? It's always the one
Oh my
button
gosh.
that when we have all this data, if we can put it in a systematized format and have it, how do you say, be detailed enough, we should be able to see different bottlenecks and such historically and what's working and be able to extrapolate from that and continue to grow and develop. And so, yeah, I mean, first and foremost, just keeping track of things in a detailed fashion is vital, really, really important. And
Yeah.
is that kind of where you were going with it too?
100%. And I love the example of it's always a button, and it's usually me that didn't push a button. But
Isn't
so
it? Isn't it
but
just like you're talking about what gets measured gets managed, and when we talk about the mission, vision, values that as we're introing into the podcast and all that kind of stuff, and what we live by, each one of those categories, what do we have? The four pillars of prosperity that we talk about: our time, our health, our relationships, and of course our legacy. Like, I was at church the other day, and the series is lifting up your legacy, and people don't realize that you have a legacy, like it or not. Your legacy is your legacy, like it or not. And like, if you're focused on watching Netflix and that's your main focus, that's gonna be your legacy. That's what you're gonna leave behind, right? And so, like, it goes with so many different areas. Like, when you're seeing a breakdown in a relationship, well, what's causing that? So many people are so easily like focused on pointing outward instead of like inward and tracking oneself, like
ooh,
that.
good.
Like, people are so unaware of how powerful it is to look inside and to track again. Like, and if you don't know the measurements that you should be tracking, then that's something like, again, in your fitness, there's macros, there's time in the gym, time in rest, there's calorie intake, there's so many moving parts in terms of what you're supposed to be tracking in order to get the results that you want to achieve. It's the same thing in trading. It's the same thing in your relationship. Like, you don't realize how many patterns, how many bad patterns you have in your life until you actually start measuring and managing those things. And it might seem daunting. It might seem overwhelming at the thought at first, but when you start to actually track those things and treat every area of your life like a business, measuring your KPIs, your key performance indicators, that's when you can really start to get to see real tangible results in your life. And why is that so important? Because ultimately, you can't necessarily control everything that's happening to you. You can't necessarily control what's happening in the market, but you sure as heck can control how you respond and how you behave.
Mm, exactly. And what's interesting too is when you start tracking, you start finding those things that are having a negative impact on your life, or in this case on trading or in business. Um, all of a sudden it helps you to kind of identify where your focus should be. So, and at the same time, you don't want to get too focused. You got to kind of keep an open openness about all the data. Because if you focus on one point of data, sometimes the other points of data give you even more clarity. Give you an example. Okay, so a lot of traders, what they do is they have a plan, and the plan works great for a week. They're like, dang, I cracked the code. I'm good. I'm being disciplined with my plan. And then the next week, let's just say on a Monday, they execute the exact same process and they lose. Okay, now granted, I'm doing pretty good with trading and I lose 30% of my trades. Okay, I have a 70% win rate. It happens. But the difference is when I lose, I don't immediately tweak my plan. I look at my whole thing and I say, "Hey, did I follow my plan? I did. Okay. Is this part of the 30%? Must be. Moving on. I'm going to do the exact same thing tomorrow." And then the next day, or sometimes even within the same hour, following the exact same plan, I more than make up for the loss.
So
But
you
what,
have not
That
you have not
goes,
just a healthy pattern, you have a thriving pattern.
right. But what
And
most
do you
people,
know what those four things are for you for that? Yeah, I want to get into the most people thing here. That you're tracking with me, you're with me here, and I'm
yeah,
with you. My point is that do you know what your four behaviors are? And I witness this in you consistently. Do you know? And most people listening to this might not know this, and this transfers into every area of your life. These four behaviors. You kind of touched on it a little bit, but do you know what those four things are?
discipline.
Well, discipline is a number one, and these things actually encompass that. But there's four things, four damaging things, and four fixes.
Huh.
You want to know what those four are?
Yeah.
It's a 4x4 framework here. Okay. So psychologists can pinpoint, and we'll use relationship as an example, and then we can also you'll see where I'm going with this because this will track in front of the charts as well. Okay. So in relationships, psychologists, some of the best psychologists in the world have found a four behavioral pattern that will immediately let them know that if a couple is doing this, it's not a matter of if, but when that divorce is or a relationship breakdown if a person is not married is inevitable. So these four behaviors are first and foremost criticism. Second is a buildup of resentment. Third is taking offense to everything. Okay, and we're talking about even when you're getting good feedback, you're starting to take offense to even when somebody's trying to speak love into your life. You're taking offense. And then the fourth is stonewalling. So I want to kind of move away from the relationship for a second. Let's talk about in front of the charts. Criticism. When does that ever happen with a lot of our students, Zach?
Oh yeah. They'll criticize themselves pretty hard.
Criticism. Okay, number two was resentment, buildup of resentment. Does that ever happen in front of the charts?
Yes, and it's actually kind of interesting. What are they building resentment against? Because for some people, they're resenting the strategy, or they're resenting the market itself. How dare it move in a different way than I thought?
whenever a problem presents itself, we really have it comes down to two options here, and it's either to become bitter or to become better.
Better.
Bitter or better. And so a lot of people become bitter in that resentment process after the criticism.
Yeah.
Now, a process of taking offense. And, I think somewhere in between those two places, this is where we get into revenge trading.
Oh yeah.
And somewhere in between there's this thing called stonewalling. Stonewalling is when a person now, what I see in trading, and again, transferring to relational and transferring back and forth here, but in trading, that stonewalling looks like my confidence was rocked so dang hard that I'm completely pulling away from this whole scenario. And they'll quit trading for sometimes months on end.
Mm.
Some people maybe forever, but they'll quit for a long time because they got like, and this is why risk mitigation is so important because you mitigate your risks, you mitigate the hit to your confidence. And when people in trading lose that confidence, like I personally, in my trading career, have had a $20,000 hit. It was house money, but it was still a $20,000 hit in 10 minutes. And I cannot tell you what that Travis witnessed the emotions that I went through in that process. Okay. And I'm here to tell you, if you've gone through that, you're not the only one. There is a way to get away from that and to build these healthy patterns. So now let's move into the actual healthy pattern. Okay. You guys ready for the healthy pattern? Here's the fix. Here's the fix on how we go from unhealthy pattern in any area of your life. Right now, we're talking about trading to healthy and then thriving. So the first point of contact is, instead of criticism, now we're going to have a flexible thinking. Now, if we're talking with people, that means I'm going to have flexible thinking around the feedback that I'm getting, whether it's negative or positive. I'm going to have a flexible thinking surrounding it. I'm going to seek first to understand. I'm actually going to want to put myself in the other person's shoes. So now, in this case, let's move back to trading. I'm going to have flexible thinking surrounding the data that I have in front of me. I want to have flexible thinking. The next one is moderate emotions versus extreme emotions. Moderate emotions versus extreme emotions. Could you see now, Zach, how if we now start implementing moderate emotions versus extreme emotions, how that can make a big difference in front of the charts?
Huge. A quick word track hack. This is something that I learned from Blair. Is instead of using words in regards to your own trading, like good or bad or better or worse, use effective or ineffective.
Mm.
Good or bad it's a form of judgment. So even if you're talking about yourself and you're like, oh, that I just traded super bad, like you're judging yourself. But if you're like, that was an ineffective session, now you're evaluating. Now you're like, what could I have done differently?
Mm.
Right. And so it kind of triggers your mind in a different way. It's very,
Mm.
very helpful.
So good. And now the next one is moderate behaviors versus extreme behaviors. And I know it can be hard, but one of the first things is if I know when relationally, if my heart rate starts to increase in the middle of a conversation, that is a telltale sign that now whatever I'm thinking or whatever I have on my heart and mind is not the best time for me to express. You know, we were talking the other day, Zach, about faith without works is dead, and when is it that I'm supposed to go in and do something, and when is it something that I'm supposed to pull out of the equation and wait for a minute, right? Like take a minute. You know, that, like, how many times in front of the charts, like I know this. How many times in front of the charts does a trader get that heart rate start to and if that starts happening, what's your behavior at that point?
Nice. Yeah.
Moderate behaviors versus extreme behaviors. That's a telltale sign that there's
Huge.
something happening that we need to remove from the equation. And then the next one and the last one, and this is integral, because so many people, it's so easy to point outward, point blame at a person, place, or thing, or whatever happened, a happening. It's inward, checking oneself. Checking oneself. You know, you've got a book called Extreme Ownership that you always point our community to, Zach, and it's like, what can I do? Again, I cannot necessarily always control. I might be able to influence, but I can't necessarily always control everything that's happening to me. But I sure as heck can control how I behave and how I respond.
Yeah.
And that like, I love that effective and ineffective, because there are times where, like, I still stumble in this, right? I'm a human being. We all do. We're going to stumble through this. But the idea here is very much like the Bible is not there for you to become legalistic and be perfect in everything that's in there, because it's an impossibility. It's a roadmap. It's a GPS to help you get back on track when you fall off track. Right? It's a set of principles, it's a set of skill sets that is going to help you stay on the straight and narrow. I mean, you said yourself, you get a 70% win ratio. You right now, over the last 5 months, have 500% growth in account.
Yeah.
Where are you at so far in the start with James in the last couple of days with this new case study?
I'm up about almost 300 pips this week. It's very effective. It's very effective. But I'm still at a 70% win rate. I have lost, you know.
But at 300 pips, like you've got to be over 100% on your account already in 2 days.
Yeah, I started at gate one too.
Okay.
So I ramp, but every 40 pips, I'm ramping it up a gate.
So
So
do you
it's,
know the percentage of growth that you have in the last couple of days?
I know. I can find out though.
Well, while you do that, Travis, um, out of everything that we just finished discussing, like what are the key factors for you that kind of stick out to you?
Yeah, what I wanted to say was that it seems like, we opened up and talked about risk mitigation, and now we've identified that one way to mitigate risk is to track everything systematically and specifically, right? And that seems a little bit shallow until we also pair that with the concepts of having the character of a professional trader, and how do you approach the observations of what you're seeing inside of the data, right? So it's not just keeping track of it, because everyone can just track numbers. It's also, how do you interpret and respond to these as well to make those improvements. The idea of the moderate versus extreme behavior, of either taking the lesson and understanding it and extrapolating from there, or going in revenge trading, right? And one thing to note that people don't realize is that you can have extreme behavior in a good direction as well, and it still
Mm.
be a bad thing. So, for
Mm.
example, I just placed my trade. The markets are perfect today. I'm feeling pretty good, pretty lucky, whatever. And then you start breaking your rules in your plan because you're trying to go through and capitalize on all the little opportunities, rather than realizing that the opportunity is that day in whole. And if you have a plan and everything is being tracked correctly, it's not about what you do that day, it's what you do over the long term. Because
Mm.
just like you can have a really great day, you could also have a really bad day. And if you're not following this systematized plan forward, then those good days come and those bad days comes, and that account cycling, as Zach called it, is going to come as well. And so our approach to interpreting what's going on is really vital. So what I understand from you guys talking right now is that there's certain metrics that really are important when you're trading, and not all of them are. You don't have to have every single data point in the world. You need a few of them in a way to interpret them, and then you also have to have the right character around
Mm.
interpreting them, right? So it's not criticism, it's flexible thinking. What was effective, what was ineffective about what I just observed? It's not resentment for making a mistake, it's moderate and or sorry, yeah, moderate emotion behind it, and saying, okay, well, how can I improve? What's my step tomorrow? Like what's going to happen? And it's not always, okay, I'm going to change my entire trading plan. It's like, no,
Yeah.
I need to learn to see what that little thing was and how I can
Mm.
incorporate better judgments
It's
going forward.
Mm.
sorry, I'll let you finish here.
Well, I'm trying to bring everything, because I was writing notes down, Brian. I've not heard that from you before with the criticism, resentment, offense, and
Oh
stonewall.
man, that
Opposite,
has
right?
completely revolutionized my whole life. Like in like so I had the honor and privilege, and Zach, we're getting to your numbers here in a second. We're staying on track here, but like I had the honor and privilege because again, like what's the whole point of what we're doing here with Prosperity Movement? A lot of people don't know the heart behind why we started this whole thing, like what the whole thing was. Like it really genuinely started with seeing what was happening in the world, understanding when we look at patterns yet again, like I was diagnosed with Asperger's syndrome, okay, which is high functioning autism. And so the first thing there is like, okay, there's challenges that come with that. But one of the most amazing things is I see patterns, bro. I don't see dead people. I see patterns. What movie is that from? I tried to be funny. Anyways,
Sixth Sense.
so I see patterns. And one of the biggest patterns that I saw while I was with a registered charity touring all over North America, uplifting and empowering youth using music as the vehicle, we were doing damage control. Kids would hand in things like suicide notes and razor blades as a sign of making changes after the show. Uh, we would write, "This is my last mark" on their arm, and I just noticed that okay, like we're doing this damage control in schools, going across North America, sharing a message of hope, transformation from tragedy, and just noticing the pattern and like again this inflation that just keeps on going through the roof. And back in the day, divorce rates weren't what they are now, and we had what we call a nurturer at home and a hunter gatherer. So typically it's not always the way that it was. Maybe dad was at home, but for the most part the women we're nurturing at home while dad was hunting and gathering. But right now we have this massive thing where like everybody's out hunting and gathering, slugging it out in the 9 to 5. There's almost no such thing as a 9 to 5. Companies don't give you 9 to 5 because they got to give you more benefits to do that. So everybody's working the system to not do that. And so everybody's out slugging it. And now teachers are raising our kids. Okay, that's a problem. That's a serious problem. So for us, we were on a mission to help families across the nations. It started with businesses, freedom seekers that were building businesses to have more freedom frameworks. We wanted to help people drive more impact and income so they could do more of the things they love with the people they love most. And in turn, hopefully change those numbers, which divorce rates are 60% right now, 75% for entrepreneurs that are not working together. And 9 out of 10 people that are dealing with mental health and addiction are getting divorced, and 50% of the Western world are dealing with mental health and addiction to some way, shape, or degree at some point in time in their lives, whether now or later. It's happening, and it's just the reality of the equation. And so 2 of the biggest factors for divorce right now are, 1, challenges with money and communication challenges with money, communication around money. It's those 2 biggest factors. And so a lot of this also stems when, again, if we're checking oneself and going through these four patterns, it's like your communication with yourself is where it starts in everything that you're doing, right? And so that's those 4 patterns. I learned it from Bill Eddy, and I was just saying, like, the honor and privilege that I've had is to actually work with the CEO of High Conflict Institute one-on-one. And with this individual, and Bill Eddy is like one of the most brilliant minds in the world. He's a therapist, a lawyer, a mediator. And as I was going through all of this, I was like, man, all of this is literally, it transfers into every area of our 4 pillars. So now, without going too far into it, like we're developing some serious partnerships and ways that we're really going to be able to help families across the nations, and that with everything that we're doing here. And first and foremost, it starts with helping you drive more impact and income. So let's get now back to brass tacks.
Yeah.
In the last 5 months, Zach, you have done 100% on your account every single month. You had a 500% growth in your account, and now you decided to start over, and you wanted to use the August rush as a case study. And so you started not yesterday, the day before, I believe, Tuesday. So from Tuesday to Thursday, we're now on day 3. You got a 70% win ratio. You got over 300 pips. What's the percentage growth?
262% growth in 3 days. And now, keep in mind too, here's the crazy part. So I got about 300 pips. James did about 1,250. Okay, so I'm capturing a fraction of what that guy does, right? But it's still highly effective, and all I do is I follow my plan to a T, no exceptions, not a single exception ever.
Could you repeat that number again? 200 and what now?
262%.
260%. Where are you going to get 260% growth on an account in 72 hours?
All right. So
are you at this point moving at a higher rate than when you took that 590K in 90 days? Are you actually moving at a faster pace right now?
I think so, yeah.
Oh, bro.
Yeah.
Oh,
it's crazy.
Man. That's insane.
Let's put us some voice to reason here, because if anyone's listening to and they're like me, like you guys too, we've all heard this before. If it sounds too good to be true, it usually is. So 262%. How do we quantify this for people to think correctly and have proper expectations, right? So it's obviously possible to have these percent gains, but a 262% increase on a $1 account, you made $2.62, right?
Yeah.
So it's like, okay,
so good.
So, but if you have $1 million, obviously that's a lot larger spread in a very short amount of time and stuff. Okay, so it does matter what your account balance is of how this actually extrapolates or translates into dollar bills. So it doesn't have to sound too good to be true in that sense, because here's a couple ways to look at it. When we show people how to actually start documenting and processing their own trading plan, there's a few ways to look at their own numbers, right? So for example, if you're listening to our podcast, you heard Zach weeks ago talking about how his main focus right now, or at the time, was I just want to get really stinking good at making 10 pips per day, Okay. So if you're doing that, then your percentages could be all very different on any given trading session based on what your starting balance is, right? But 10 pips a day, as you scale into the gate system with a larger stake, if you have a $50 stake, then that's a $500 day. And that is a full-time income for somebody on just the 10 pips. Now, depending on your stake too, that could be a completely different number with 300 pips, right? So the percentages and the pip counts and stuff is different person to person, depending on where they are, their experience level, what their stake is, what their balance is in their account and stuff. And so there is a process of being able to extrapolate this into the future. And so 262% right now, that sounds great. But as his account balance grows, his risk is he's also going to decrease that risk and make it actually make sense there too. And so
I just let my call know that I'm going to be a little bit late. You're nailing it. You're nailing it. I actually want to extrapolate a little bit more, if that's all right with you.
What? I'm sorry, I didn't
I
hear you.
want to dive a little deeper here for a minute, if it's all right with you. We're gonna go a little bit over.
Finish up the thought real quick. So if you start, like, people were listening to Zach and he was making, we were talking about making 4% per day, and if you do the math on that, that goes into your first couple of years, you'll be the richest man in history if you continue to grow at that rate, right? The larger your account grows, the less percent you need to make in order to have the same impact on the translation to dollar bills. Or in other words, as your account balance grows and your compounding grows, your percent gains can decrease and decrease and decrease to where you're at 1%, 0.5%, and all of a sudden it's still a full-time income for what people are looking for, right? And so as you progress, your numbers should adapt, right? And so I just wanted to clarify that. So how can you help further clarify that, Bryan?
I want to further clarify how, like, astronomical it is. So, like, Zach is coming at this through a lens of, he's a guy who practices those 4 behaviors that we were talking about. Okay. So he's in a healthy range. Now, what can happen when you take that to the next level? And, like, because I think there's also layers and levels of practice in those 4 things, right? These are the things, by the way, that I want people to understand, that we're really excited, because we're right now, we are in the middle of a partnership with an international corporation, interdenominational deal here right now, where we've got a leader who's, I'm not going to say his name, at some point maybe we'll have him on the podcast. It'll be amazing. But his identity is actually it's protected. Typically, if he does an interview, he's going to be, he'll be shadowed out, because this is a guy who has literally he's been an advised, been to Area 51. He's advised for the White House. He's advised for multiple senators. He's seeing something special in the prosperity movement right now, and what he wants to do is, like, we already take a data-driven approach. He wants to take that another level, and we want to go into the psychological aspect into this in a much deeper level. So, like, I'm going to go ahead and say that right now, Zach has, like, this ability in terms of, like, we don't have a measurement on this yet, but imagine when we do, as we go through these 4 behaviors, where Zach has, well, let's, again, 70% win ratio, 30% loss. That's what he's averaging. So there's a metric to look at. Now you look at James. Okay. Now, James, let's put the numbers to this for a second. We're going to do some math as we go. The last 3 days, you said how many pips? Because you captured 300. So you captured, what was it? A fourth, a third, fourth, a fourth of it. So there's roughly how many pips so far? 1,200 and how many?
1,250.
1,250. 1,250 pips is where we're at right now. Just so everybody's aware, James is sitting at 50-pound lot sizes, which is closer to about 65. So let's go $65 USD. That's $81,251 in the last 72 hours. And that's not counting scaling in. When you understand the term scaling in, there's going to be points where he's going to have a second and third push, and you're going to learn these terminologies on the other side. Second and third push, where he's going to hit the button again, where he's going to be 100-pound lot sizes. And
last week, he actually did more. So 2 weeks in a row of over $80,000. It's crazy.
So again, like, I don't know where, and just perspective wise, where are we at on the pip count all year?
I don't know. I don't know. Let's
We're
see.
not there yet, but last year it was 28,000.
28,000.
28,000 pips with a total loss. Now, Zach told you his win ratio. We don't even know. It's less than 1% for James's loss ratio. James has a special account. People need to understand he has a special pro account. If James loses on that account to a certain degree, he actually also has to pay the broker. So imagine not just losing money, but having to pay them. Okay, he has a special professional account that gives him super sexy spreads, which means that he's basically it's just raking. But the point is this. Last year, out of 28,000 pips, he loses a total of 18 pips over 5 plays. Sink in it, digest it, bite onto it, bite into it. Take it, digest that for a second.
At the beginning of August, we're at 13,685 this year.
We're going into the last quarter of the year. We're going to break that number.
Oh, yeah.
Last year.
I mean, just last week and this week's pip count, plus next week we have all day sessions. We're already well on track to surpassing it.
But here, another clarification for those 5 plays that he lost 18 pips. And I love talking about this because it also is a little bit humbling for him as well, is that time that he was trading just a few weeks ago. And he made less pips on that call with everyone else, all the members, than they made. And the question was like, why didn't you go in? There was another opportunity for you to go in, even though you were late on your entry. He goes, no, you missed the point. It's because I was late that I didn't go in. And so, yeah, sure, there was a micro opportunity, but not all of the stars had aligned, because the way that I have my trading plan set up, here's how I trade. This one didn't line up. And because of that, I'm willing to say no right now. I'm not going to have FOMO. And so that's the mark of the master there. And the reason why there's only 18 pips lost, because he only wants the simplest, most straightforward, where the stars align plays. And sometimes they come really quick. Sometimes you have to stay a little bit longer in the markets, and sometimes you don't do it at all. Yeah. There are times that he doesn't trade because he's not seeing those simple, straightforward, stars aligned trades. And so he doesn't. Whereas a lot of other people, in fact, probably the majority of people, are going to look for those other micro opportunities. Yeah. To say, hey, there's a possibility, a probability, if that, right, that this will work too. So they're going to go take the more risky plays as well. And he's like,
you're talking about an overtrader. You're talking about an overtrader. And here's where it gets fun, guys. Like, I got 2 more things and we're going to tie up. But like, to add on to that, we are getting to a point where we're starting to identify things as we are supporting our community, and what gets measured gets managed. Because not only, at this point with Prosperity Movement, that we helping you do that for yourself, but we're doing that with our community, like overseeing the community and, helping them through that. And then also being able to help more people by looking at the numbers. And Zach was telling me earlier that right now our students are averaging between 75 to 100 pips a week. Yeah. And so, like, here's the next thing is, if we can identify you as an overtrader, we have a fix for that too. This Johnny 5 deal is just kicking it, bro. And it just forces you to go to another layer of discipline, because you got to wait for specific things to happen on an even deeper level. And so it's really fun to see that when students are wrestling with the 1 minute scalping, that they're going to move to a little bit of a higher time frame and wait for that to happen. And typically, the pip count on a 5-minute candle versus a 1-minute candle is, you're moving from between 20 to 30 per play to about 50 to 80 on average in one play. And so it's really fun to witness. Shane does ask, I want to address this and then we can tie this up, but how do you manage the plan and follow it? Do you have the plan memorized? And that's a cool thing. This is where we're reading a book called Get Scalable right now. I want to highly recommend that for anybody in business. And if you're a trader, you need to read that book, Get Scalable. One of the things they talk about, and Andre was talking about this the other day. I kind of gave away a new name of a board member. But one of our advisors was talking about the other day how pilots have a checklist. They have a list of things that they are, even though they know it intrinsically inside and out, they're still going through that exact same thing, saying it out loud with the team, going through the motions every single time. Nothing gets missed.
So part of my trading plan, Shane, is I read my trading plan out loud every day. And then in terms of how often do you update it? once a week, you can review your trades, and if it's effective, keep doing it. If it's not effective, or you find an area to improve, you tweak it once a week. That's the most. Never tweak it more than that.
Man.
That's my advice.
So good. Very good. Well, with that, we covered a lot today, and that really kind of, was quite the I don't think that we expected it to go over like this. We went over by about 10 minutes. So hopefully everybody gathered all of that value, and we want to wish everybody the best in health, wealth, and relationships always. We want to give you a gift here today as well, that if you have not gone through the blueprint does two things for those that are looking into this and learning more. And again, we got two types of people that are coming through. One, a very new person, and two, a very frustrated person who has experience with trading and not getting what they want or need out of that experience. YouTube University is not working, frustrated with other platforms that don't have support and accountability. We get it. We feel you. So the blueprint is going to help you with your due diligence, number one, and two, it's going to help prepare you for your success. And those that have gone through it, we've seen increased success on the other side. And so if you want to get access to that completely complimentary, just go to prosperitymovement.online. At the bottom right-hand corner, there's a little chat bubble. Just text us, just shoot us, fill in your information and say blueprint, and we'll get that information to you. Again, we want to wish you all the best in health, wealth, and relationships. God bless you, and bye-bye for now.
Bye, guys.
Bye-bye.